Hello, guys. Thank you very much, and welcome to the second part of this weekend's pre-market analysis or pre-market preparation. I'm Rome Chungura. I would like to extend this appreciation for your patience and for your time that you have taken to watch this analysis. So, without wasting much of your time, let's get into the USDZAR analysis. So, we'll start with the monthly chart as we are in the new month, as Monday will be new month, right? So what you can see is that the price formally, what you can see is that the price after this double top, right, after this double bottom, I'm sorry, right, what happened is the price made a higher high, right? So after making this higher high, the price is now moving downwards, which is sort of a retracement or a pullback, right? So we are currently in that pullback. And for me, the tricky part about this pullback is that the market hasn't made a higher high or a new high or a new low. So what I'm still anticipating given these conditions is that the price will continue the downward movement, right, until it retests this 15.21600 zone, right? And if this price holds, right, as if this zone holds as a support zone, right, what we are going to likely witness is a movement to the upside where it will go and retest this 17.60086 level. Right. Or alternatively, the price may make a low or a high maybe here, right, and then move to the upside to retest this 17.60086. But given this pattern, right, we can see that this is kind of an evening star, right? And now after that evening stars came this bearish marubozu, which gives signal to the strength of the bearish market or the bearish activity, right? So we are most likely to experience the continued movement to the downside up to this 15.21600 zone. So I'm not expecting much bullish in this coming month unless the US elections that are coming prove otherwise. Right. So let's move on to the weekly time frame. So now on the weekly, please ignore these lines. These signify a position that I'm currently in. Please also do not replicate it because you'll be doing it at your own risk. Right. This is based on my analysis, which is different, which I'm not yet comfortable to disclose at this point. Right. So this low is lower than this low, it's lower than this low. So the price made a new low and there was after a lower high, right, which signifies that there is likely a bearish trend that's going on. And also remember last time we also gave that head and shoulder pattern. This one as it is, it's still holding, right? We're expecting it to hold as the price broke the neckline, right? We're still expecting that the price will continue to the downside. So in the coming week, what we're expecting is, since the price has established a new low, right, given by this bullish candle, what we'll be expecting is that probably the price will try to move to the upside to retest this neckline zone, right? And after retesting that neckline zone, if it holds, what we are going to see is that the price will move to the downside all the way down to around this zone. And as I had given last time, I think the anticipated move will be approximately around this zone. That's where we'll be expecting the price to continue the downward movement from, right? Alternatively, since the market moves either up or down, right, or sideways, what may happen is the market may break this neckline, this resistance zone that has been established by the neckline, as it will be retesting it, which means that the price would have not held, right? So what I'll be expecting is that if it breaks this zone, it is going to go all the way up, right, and maybe retest this position, and after retesting this position, the price may either break this zone, or this zone might hold, and then the price will move back to the downside, right? But however, as for just next week, what we're just expecting is that the price will either break this zone, right, when upon retesting it, or this zone will hold, and then the price will make a movement to the downside up to the 15.21600. Then on the daily time frame, still have to put that head and shoulder pattern, right? So what we can see from here is that the price broke this neckline, right? After breaking this neckline, it came and formed a new low, right, which is lower than the previous low, this low, right? So as we can see, this low is higher than this low, which means that, so since this high is higher than this new high, it means the price has made a lower high, right? So if the market makes a series of lower lows and lower highs, it means there is a bearish trend that is being established. So as we can see, the market, let's say this is a trend line, the market made this first, right, first touch, then second touch, and then this confirmation touch, the third touch, right? So given this, what I'm expecting is that in the coming week, right, the price, once it breaks this low, right, the price will continue the downside movement. It will continue the downside movement, right, where it may go to the downside, then retests and closes somewhere below there, and then continue to the downside until it gets to that zone, right? Alternatively, what the market may do is, since we can see that this is a new low that has been established, the market may reverse right here, right? And after reversing right here, it's going to break this, right, to form a higher high, right, somewhere. Then after forming that higher high, it's going to pull back, right, and close below the new low that would have been established, right, and then move to the upside back to the 17.60086. But for me, because of this evidence, this bearish evidence that has emerged, I will still anticipate that the price is going to continue the downside movement. So what I'm doing is I'm preparing for the downside movement, right, so that I continue buying in pullbacks. As it is right now, on Monday, or when the market opens, I still have sufficient support for me to add to this position that I have, right, for the market to continue to the downside. So if I during this upcoming week, if I add a bearish position and it fails, I'll be at peace with it. But if I open a bullish position and it fails, I would have failed to stick to my plan. So basically, because of this support that I have in terms of the head and shoulder pattern, also the trend that is emerging, I'm going to prepare for bearish positions. I'm not going to take any bullish positions because it will be risky for me to do that. I won't be willing to accept any losses on the bullish pressure. So thank you very much, guys. Just as a custom that I've developed, this week I'm also reading 2 books, right? So I'm reading a non-trading and a trading book, right? I'll start with the non-trading. So with the non-trading, I'm reading 8 Pillars of Prosperity by James Allen. So what I've learned this week is there's a section or a chapter on system. So one of the 8 pillars of prosperity is system. So you have to develop a system in your life, a system in your business, so that even if you are not available, the system will work out for itself. Someone can be able just to adopt the system and then take it. So the clearer your system, the more prosperous your endeavor will be. So it encourages all those things, and also it encourages people to be original, right? So in trading, we'll see that there are so many sources of information, and we end up listening to this person, taking the strategies from this person to that person and that person. But ultimately, for you to be prosperous, right, in this business, you have to discover who you are as a person and what fits to your personality. So hence the originality and the realness that's described by this book. Then on the trading, I just received this, the Universal Principles of Success for Trading. This is a very good book. So I started it on Monday. Yes, I started it on Monday after I had finished the Daily Trading Coach. I think I'll be reading it for the next 3 or 4 weeks. So this is a very good book. In the first 2 chapters that I've read, they've been so enlightening, and they have given some nuggets. There are a lot of nuggets that are there, but of particular interest is something that I read today, right? And I just thought that I should share it with you, right? And it is called Maximum Adversity. So they said the market has got this particular feature or this particular characteristic that it gives maximum adversity. So whatever we do, even the preparation that I'm doing right now, the market is going to test it and try it. So I'm not expecting everything to come out as it is. I'm not expecting to be flawless. I'm not expecting for things to work at the same goal. You will see in the future video that I've taken numerous losses on these, especially on the USDs, where I had increased my positions to certain levels, right? According to my plan, yes, but they still failed. So this proves that maximum adversity, right? That the markets will make sure that it will grind you, it will polish you to becoming that diamond. So that rough diamond is going to be made clean. So in whatever you're doing in the markets, make sure that you have that grit, you have that tenacity, that drive, and the endurance to endure anything that is going to be thrown at you. Because even when you have a setup that you say this is of a higher probability, I double my risk on this setup, times will come where that setup will lose. So thank you very much, ladies and gentlemen, for joining me. I hope you have enjoyed these short videos. If you didn't watch the first one, please go in the link in the description box and watch the first analysis of the Euro USD. And what's left for me is now to say all the best in your trading this coming week. Grind the markets with grit. See you again next week, see you again next week. Thank you.